Hi guys, welcome back to the channel. Welcome back to another Internet Computer Protocol video update. Well, today we are going to be taking a look at the technical analysis on ICP, where I'll be sharing my price predictions on the short, medium and longer term for this crypto asset. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, go ahead and subscribe and stay up to date with all the content that we do here at Cheeky Crypto. Let's jump right down into today's brief update on ICP. So here we have ICP paired up with USDT. We're on the 1-day Binance chart, and we have seen some really good growth in a 5-wave structural point to the upside, hitting into that resistance on the 22nd of July, so just a couple of days ago. This is following on from the previous videos that we're talking about. We were looking for a 5th wave move to the upside, and then we're looking to come down and retest out some of these interesting areas of support. The 5th wave movement has reached its expectation. Let me go ahead and zoom in on this. It would typically go between 1.236 and 1.618, and you can see that is marked out right here in this yellow box area. Okay, this range is of course $10.75.8 to $11.23.8. This is what we're talking about in the previous update video that we put out for ICP. Hitting this range and getting rejected. We got rejected here because this is the obvious area of previous support turning to resistance. Now, if you're not into Elliott wave theory, you might be thinking, well, what else could this possibly be? Maybe this is some other kind of pattern, some kind of formation that we need to be aware of and all that kind of stuff. Some people might say it's looking like a cup and handle. I disagree because I don't think it really follows the structures that you need for a cup and handle. Let me show you why. A cup and handle doesn't normally have the V bottom like you see here. V bottom is a good indication of reversal in the market, but it's not a good indication of a cup and handle. A cup and handle, though, is something that some people might be looking at. They have a reasonable area of failure, so just be aware of that when you look for a move to the upside. If a cup and handle does play out for whatever reason, it would normally target the 1.618 on the next run to the upside, which will be $16.28.4. Okay, so cup and handle, I don't think that's what's going on, but it's some people might kind of try to draw conclusions on. Elliott wave theory tells us that we are going to be looking for a retracement, and I have marked out 3 areas in the previous video. For this retracement, we are looking at $8.38 to $8.76.9, and this is the previous area of resistance. This is where I hope that we find support and that we can rally from, and again would align more nicely, I guess, with the idea of a cup and handle. Going down lower would break that cup and handle structure, which would be $7.50 to $7.88, and this is a previous area of support that we broke, turned into resistance, and could come back down to and turn into a support level. And then we have those deeper retracements, $6.24.4 to $6.65.5. These would be more of a wave 2 retracement, very, very deep retracement on the 5-wave pattern, but would set us up for a much more explosive move to the upside at a later date. Okay, so 5 waves to the upside. We never see 5 waves in isolation. We always see 5 waves in another structure, whether that is an impulsive pattern, which is 5 waves in itself, which is a 5 3 5 3 5, or whether it's a zigzag pattern, which will be a 5 3 5, or maybe even a diagonal of some kind, right, which was again would be a 5 3 5 3 5. So what I'm saying here, and I know this is a bit much if you don't understand Elliott wave theory, but when you find a 5-wave pattern like this, that's never on its own. There's always going to be an additional 5-wave pattern. So considering that this is a bottom, and we can see that V shape here, this tells us that this 5-wave pattern is the beginning of a bigger run, which is going to have another 5-wave pattern to the upside. Okay, that 5-wave pattern can be many different things. As I said, we could be looking at just a retracement and then another 5-wave move, taking us out towards that $16 level. Again, would fall in line with the idea of a cup and handle, but it won't be a cup and handle in my opinion. Or we get those more explosive moves where we have a deeper retracement for a typical wave 2 and an explosive move to the upside in a bigger impulsive 5-3-5-3-5 structure. Okay, so there's a lot to play for here. This retracement that we're finding on ICP could be a great dollar cost averaging opportunity ahead of what is to come next. Now, if I go ahead and throw smart money concepts into the mix, you can also see that that area where we were targeting out our 5th wave happened to coincide with the equilibrium area on smart money concepts. Equilibrium is the 50% level between the discount and the premium ranges. Okay, that 50% level right right there is usually going to act as support or resistance because it's a 50% Fibonacci relationship between discount and premium. Now, obviously, anyone who understands discount, it's going to be where all your buyers are. And the premium area up here, this is where all your sellers are. Okay, anyone paying or buying ICP up in this higher range is paying a premium. Anyone buying ICP at this lower range is buying it at a discount. That's kind of the concepts there. Now, when it comes to smart money concepts, we can see that there's a fair value gap. There's actually two fair value gaps in the chart on the daily time frame. Okay, we have this one down here. This is gain coming in at that lower range of $7.50 to that slightly higher range of $8.43. Okay, this is where we find that there was a pocket of illiquidity within the price action. This is basically telling us that there was a buy order or a significant amount of buy orders down here, that there wasn't enough selling pressure here to fulfill, so price had to jump up higher. This is really important because this shows us that this area there wasn't enough liquidity. And when it comes to liquidity, the market likes to put liquidity where liquidity was not. And what I mean by that is price likes to go back and fill out these gaps that were left behind, right? This is not a guarantee because you don't see it every single time, but there is a high probability that price likes to come back and fill out those gaps. Okay, so seeing some fair value gaps, we've got two of them on the chart here. Chances are we're going to fill out at least one of them, in my opinion, which will be this higher one. I do think is an obvious grab at $9.02 to $9.25.2. We'll fill that one out, in my opinion, as we look to find support on this previous area of resistance. And of course, we can talk about whether or not we'll fill that extra gap a little bit lower. Now, from our smart money concepts, we're still in a bearish structure. We haven't broken that. We are going to have to find a closed position above some previous swing highs. If we can get a closed position above equilibrium, that might just about do it. But we'll have to see how that kind of plays out. But for the most part, here we unfortunately are still in a bearish structure from a smart money concepts point of view. And even if we turn smart money concepts off and we just look at the kind of traditional ways of looking at the market, we can still see our daily highs are getting lower, not getting any higher. So we're not getting any higher highs here. We do have lower lows and lower highs on the daily time frame. So although Elliott Wave theory gives us this real big positive, right, the rest of the market is a bit laggy. It doesn't tell us, predictive capabilities. It's only telling us what's already there. Smart money concept tells us that there's a chance of a retracement. Elliott Wave theory already knows that because we've got the 5-wave structure. Okay, our structures are of course bearish with lower lows and lower highs, right? But Elliott Wave theory is telling us that that's about to break. We're going to have a retracement, and then we're going to probably set a new daily higher high, and that's going to break that structure where it is a bearish one into a bullish one. Okay, so Elliott Wave theory and smart money concepts, they are telling us the same thing. Only difference here is that Elliott Wave theory is more predictive than what smart money concepts is. Okay, smart money concepts is telling you that things are not looking great. Elliott Wave theory says, yeah, that's right for now. We're likely to retrace, but we are going to get that breakout. Okay, so it's important that we understand the differences between what Elliott Wave theory can do and what smart money concepts can do. But the two things together can tell us a bit of an insight as to what to expect in the immediate future before you get into those next big runs. Okay, so looking pretty good. Okay, so smart money concepts and Elliott Wave theory, we are looking for a retracement, then we are looking for a run to the upside. Here you can see the stochastic RSI is also confirming a very similar story. We are correcting down on the daily stochastic RSI. Don't get me wrong, I'm expecting volatility on the smaller timeframes with oversold statuses on the 8 and 4 hour timeframes, but our daily is looking for a correction. Momentum is shifting down. The yellow line's lower than the white line, okay? The yellow line being the stochastic RSI. The white line being what they call the smoothing of K, basically your average stochastic RSI. And at the moment, we're lower than the average. So think of this as like your EMAs and your SMAs and your moving averages, just generally on the price chart, where your longer term price action maybe is lower than your shorter term and all that kind of stuff. Essentially, this is showing that momentum is shifting to the downside, not to the upside. Okay, so it's interesting. Now, if we turn that off, throw on the divergence indicator. The divergence indicator is the relative strength index, and it's also taking a look at the RSI in relation to price action. No divergences are noted here, but we have had a bit of a run to the upside and a bit of a correction to the downside. We're still above that 50 level on the RSI, which is actually still a bullish area to be. Okay, so this isn't a bad thing at all, but we want to note that the RSI is more of a oscillator for trends, right? So it's not as sensitive as the stochastic RSI. I expect the relative strength index to continue moving down alongside the stochastic RSI RSI, and we'll find good support hopefully around that 50 level for a bounce to the upside. Okay, as this is a momentum indicator, it's showing us that there isn't a lot of momentum to kind of continue this run to the upside. This is also something that we can see from the volume profiles. We can see that price action went up in a 5-wave structure whilst our volumes were decreasing. Okay, this is interesting because obviously we know that a 5-wave pattern is impulsive in its nature, indicating that we are likely to have a retracement and then a continued run to the upside. Now, just because, we're not seeing the volumes that we want to see right now, this isn't necessarily a bad thing. This is because whilst we're retracing down right now, we can also see the volumes are, well, they're quite low. They're not exactly giving us the idea that there's a lot of selling pressure here. As we specifically find support on that 50 EMA, as you see right there, resistance on the 200 EMA, we can see that we might actually get this retracement and then a massive breakout with an increase in volume, like what we saw over here, for example, where we did see volume decreasing as we were decreasing in price, and then eventually we got this break to the upside, which was fantastic price runs. Don't get me wrong, that initial volume did drop, but we did actually get another additional spike right here in the middle as we continued that way through, and then we just finish it off with some lackluster volumes. So for the most part, ICP is actually still looking very, very good in my opinion. But I expect retracements, I expect volatility, and I do think this is going to be a great opportunity for dollar cost averaging and for building out those positions on what happens next. If I roll this up into a weekly time frame, you can see here that we're still looking at this as a bit of a reversal, and we are targeting out some pretty hefty numbers on ICP. We're not going to be talking about new all-time highs or anything like that on the kind of longer term, but we are going to be talking, about price moving up to kind of $46, maybe even $75 in the future. This previous area of support and resistance is going to be a key range for ICP in my opinion. So all in all, I'm not overly too concerned with everything that's going on. I am quite impressed with the price action so far, and I do think it's got a lot more to go. So let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? What's your long-term price prediction for ICP? If you found it useful, smash that like button. If you're new, subscribe. And if you haven't done so yet, check out my other channel where I go through the technical analysis on some other projects such as Cardano and what is going on there from the price action perspective.